Silver has been one of the most closely watched assets in the financial world, and its next major move could catch many investors completely off guard. While most people think of silver simply as a precious metal, a cheaper sibling to gold, the reality is far more complex. It is a critical industrial resource. It is the lifeblood of solar panels, electric vehicles, semiconductors, artificial intelligence infrastructure, and medical technology. As global demand continues to skyrocket to historic levels, many analysts are watching closely to see whether silver is preparing for a significant breakout. The silver market is currently facing a unique and explosive combination of factors: growing industrial demand colliding with persistent multi-year supply deficits. Add in central bank policies, lingering inflation concerns, and aggressively increasing investor interest. You have the perfect storm. Many investors remain entirely focused on stocks, crypto, and real estate. But silver may be one of the most overlooked opportunities in today's market. Whether you are already invested or simply trying to understand the global economy, this advanced analysis will help you stay informed. Could silver's next move be much bigger than most people expect? Let us break down the exact data and the massive technological catalysts. To truly grasp the magnitude of what is happening, we must first understand the historical duality of silver. For thousands of years, silver was money. Over the last century, silver has undergone a dramatic transformation. It has evolved from a purely monetary asset into an absolutely indispensable technological commodity. This dual nature makes silver entirely unique. It responds to macroeconomic fears like inflation, just like gold, but also to industrial manufacturing cycles. Right now, in the year 2026, both of these demand engines, the monetary and the industrial, are firing simultaneously at maximum capacity. We are witnessing a paradigm shift where the old models of pricing precious metals are breaking down under the weight of sheer physical demand. To understand where silver is going, you first have to understand a fundamental economic reality. The world is using much more silver than it is pulling out of the ground. According to the latest global silver surveys, the global silver market is currently trapped in a massive multi-year structural supply deficit. Let those words sink in deeply. For several consecutive years, total global demand has entirely outpaced total global supply. In recent years, the annual market deficit has hovered around 200 million ounces. This means that every single year, the market is completely consuming all the newly mined silver, all the recycled silver, and still requiring hundreds of millions of additional ounces just to satisfy baseline industrial and investment demand. Where does this extra silver come from? It is being violently drained from above-ground stockpiles. Since the beginning of this decade, the cumulative drawdown from global inventories has been staggering, bleeding major vaults in London and New York dry. You might logically ask why mining companies do not simply dig more silver out of the ground to capitalize on these supply shortages. The answer lies in the harsh realities of geology and byproduct economics. Roughly 70 to 80% of all silver mined is not mined on purpose. It is a byproduct of extracting other industrial base metals, primarily copper, zinc, and lead. This creates a fascinating and dangerous inelasticity in the silver supply chain. If the global housing market slows down and the demand for copper wiring drops, copper mines scale back their production. When copper production falls, the associated byproduct, silver production, immediately vanishes, regardless of how high the price of silver might climb. A soaring silver price cannot force a copper mine to overproduce copper. Furthermore, the primary silver mines that do exist are facing rapidly declining ore grades. A century ago, miners were extracting ores that contained hundreds, sometimes thousands, of grams of silver per ton of rock. Today, the average yield has plummeted to double digits. It takes 10 to 15 years of massive capital expenditure and permitting just to bring a new mine into production. The mining industry has been severely starved of capital investment, meaning there is absolutely no cavalry coming to rescue the silver supply. The deficit is mathematically locked in. The most massive and aggressive driver of this modern demand shock is the global government-mandated push for green energy, specifically solar photovoltaic power. Silver possesses the highest electrical conductivity, thermal conductivity, and reflectivity of any metal on the periodic table. Because of these immutable laws of physics, it is absolutely irreplaceable in the manufacturing of high-efficiency solar panels. The solar industry has transformed from a niche environmental initiative into an absolute juggernaut of silver consumption. More than 150 million ounces of silver are consumed annually just by the photovoltaic sector, representing well over 10% of total global demand, and that percentage is rising exponentially. While panel manufacturers are desperately engaging in a practice called thrifting, meaning they are spending millions in research and development trying to use less silver per panel to cut manufacturing costs, the sheer volume of global solar installations is completely overwhelming those marginal efficiency gains. We must also look closely at the underlying chemistry and technology of the solar cells themselves. For years, the industry standard was the passivated emitter in rear cell, commonly known as P-type technology. However, the solar industry is currently undergoing a massive structural shift toward next-generation N-type cell architectures, specifically tunnel oxide, passivated contact, and heterojunction technologies. These newer, high-efficiency cells are critical for generating more electricity in smaller spaces, but there is a catch. They require anywhere from 50% to 100% more silver paste per cell than the older models. When you look at the macroeconomic landscape, the numbers are mind-boggling. Nations across the globe are heavily subsidizing clean energy grids to meet zero carbon emission targets by the year 2050. As entire continents transition away from fossil fuels, they are inadvertently locking in billions of ounces of future silver demand. We are witnessing the rapid electrification of the globe, and every single watt of that newly captured solar energy must pass through a layer of physical silver. Beyond the solar fields, the transportation and advanced technology sectors are experiencing a monumental, irreversible shift. Let us examine the electric vehicle revolution. A traditional internal combustion engine vehicle utilizes roughly 15 to 28 grams of silver, mostly in small switches, relays, and window defrosters. In stark contrast, a modern battery electric vehicle requires significantly more silver. Between the complex battery management systems, high-voltage power electronics, heavy-duty electrical contacts, and the massive charging infrastructure required to keep these vehicles running, an electric vehicle consumes up to 80 grams of silver. As autonomous driving capabilities become more advanced, the incorporation of radar, LiDAR, and advanced sensory equipment, all of which rely on silver-palladium conductive layers, will push that consumption even higher. But there is an entirely new, explosive demand vector that has taken the commodities market completely by surprise over the last 2 years: artificial intelligence. The physical infrastructure required to run complex neural networks, large language models, and cloud computing services is staggeringly immense. Global information technology power capacity is doubling at an unprecedented rate. Artificial intelligence data centers require absolutely massive amounts of electricity. With that immense power comes extreme heat. Data center operators face a constant battle with thermal management and electrical resistance to prevent overheating, prevent data loss, and ensure the rapid, flawless transfer of billions of calculations per second. Hardware manufacturers must use highly efficient electrical components. Silver is the ultimate material for precision contacts, microswitches, and high-frequency circuit boards. While copper is used for bulk wiring, silver is mandatory where precision, heat dissipation, and zero-loss conductivity are required. We are currently building the digital architecture of the future, a highly advanced artificial intelligence grid. And that physical architecture is fundamentally and structurally wired with silver. While the industrial demand story is mathematically overwhelming, we cannot ignore the second pillar of the silver market, its role as a monetary asset. Silver serves as a safe haven against systemic financial risk. We are currently living in an era of unprecedented global debt expansion. With aggressive fiat currency debasement and central banks expanding the money supply, the purchasing power of paper currency steadily erodes. This is the hidden tax of inflation. Throughout history, capital has always fled toward hard, tangible assets during periods of persistent instability. We are seeing major geopolitical shifts right now. Central banks around the world have been accumulating precious metals at record paces. While central banks primarily hoard gold, retail investors and institutional hedge funds are turning to physical silver as a high beta play. One of the most critical metrics professional investors watch is the gold to silver ratio. This tells us how many silver ounces buy 1 gold ounce. Historically, this ratio sat between 10 to 1 and 15 to 1. However, in the modern era, it has blown out to massive extremes, sometimes taking 80 or 90 ounces of silver to buy 1 ounce of gold. Many contrarian investors view this as a massive historical anomaly. When precious metals enter a strong bull market, silver historically outperforms gold on a percentage basis, violently closing that ratio. The modern market is highly leveraged through paper derivatives and futures. There are hundreds of paper claims for every single ounce of physical silver. If institutional investors demand physical delivery rather than cash, the squeeze on physical inventory could trigger an absolutely catastrophic repricing event. The gap between paper claims and physical reality is widening, making silver one of the most asymmetric opportunities in today's financial landscape. With such overwhelming industrial demand colliding with extreme monetary pressures, what are the exact scenarios and probabilities investors must prepare for? To provide a balanced, advanced analysis, let us first examine the bearish risks. The primary threat to silver's price appreciation is a severe deflationary global economic recession. Because well over 50% of silver demand is industrial, a collapse in manufacturing or electronics could severely suppress demand. Additionally, If the price of silver rises too rapidly, solar manufacturers may be forced to research cheaper substitutes, potentially destroying market share. However, when you weigh the macroeconomic and geological realities, the bullish scenarios remain incredibly compelling and highly probable. We are dealing with an elemental resource that acts simultaneously as an irreplaceable industrial necessity and a historical monetary safe haven. We are facing the 6th consecutive year of a structural supply deficit driven by a mining sector that is geologically constrained. We are simultaneously experiencing an energy transition relying heavily on solar power and electric vehicles, coupled with a digital revolution powered by artificial intelligence that demands the absolute highest quality electrical conductors known to humanity. Many mainstream investors are still treating silver like it is 2010, ignoring how technology has fundamentally transformed the physics of this asset class. While extreme price volatility is almost guaranteed, the mathematical reality of supply and demand cannot be ignored or manipulated forever. Silver may very well be the single most overlooked, fundamentally undervalued, and critical opportunity in today's global financial market. Could silver's next move be much bigger than most people expect? The underlying data and technological catalysts point to a historic event. Watch physical inventory levels in global vaults, track manufacturing numbers, and pay very close attention to central bank monetary policies. Thank you for watching. If you found this deep dive valuable, like this video, subscribe and turn on notifications for more market insights. Stay informed, stay vigilant, and prepare for the shift.